In 2026, the U.S. economy is performing stronger than many experts expected, and this has come as a surprise even to economists and analysts. First, let's look at the services sector, which recorded its fastest growth rate since 2022. This sector includes healthcare, finance, professional services, hospitality, and education. These industries are direct indicators of consumer demand and business activity. The data suggests that people are still actively spending, and businesses are operating at full speed. Even during the severe winter storm in February, economic activity remained largely uninterrupted, highlighting the resilience and adaptability of the U.S. economy. Business investments are also showing a positive trend. Companies are heavily investing in technology, infrastructure, and workforce development. Manufacturing and logistics sectors are undergoing upgrades and automation projects, which are boosting production and efficiency. The adoption of AI and automation is helping businesses reduce costs and make faster, more accurate decisions. In financial services, AI-driven credit evaluation and automated lending are allowing banks to deliver results faster and more precisely. These technology-driven investments are playing a key role in long-term economic growth. Consumer spending remains another strong driver. Wage growth is moderate but stable, meaning people are not losing purchasing power. Demand is high in housing, travel, dining, and entertainment sectors. Reports from retail and e-commerce confirm that consumers continue to shop actively. Digital payment platforms and online tools have made consumer spending faster and smoother, helping sustain overall economic momentum. The Federal Reserve's monetary policy has also contributed significantly to this growth. Interest rates have been carefully maintained, keeping borrowing costs manageable while encouraging both investment and consumer spending. This careful balance helps control inflation while supporting economic growth. Experts say this cautious approach is boosting market confidence and creating stability for both businesses and consumers. Labor market stability is another key factor behind this strong performance. Employment levels remain stable, and while there are regional differences, the overall trend is positive. Low unemployment and moderate wage growth help sustain consumer demand. Companies are executing hiring and expansion plans with confidence, which further maintains economic momentum. AI and digital technology adoption have had a significant impact as well. Sectors such as logistics, healthcare, retail, and finance have improved productivity and efficiency through AI and automation. Cloud platforms and digital tools have enabled small and medium businesses to scale, contributing to overall GDP growth. In financial services, AI-driven analysis and automated systems are enabling smarter and faster decision-making for banks and investment firms. Global factors also influence economic performance. Geopolitical tensions, international trade policies, and energy prices remain potential risk factors. Despite these challenges, the U.S. economy has demonstrated strong performance, sending a positive signal to investors, policymakers, and consumers. Historically, when compared to past recessions or slowdowns, consumer confidence and high levels of business investment have helped the economy remain resilient. However, this growth is not guaranteed to be permanent. Global inflation, financial shocks, supply chain disruptions, and labor shortages could all impact the economy. Analysts recommend that long-term planning and sustainable investments are critical to maintain growth and protect against sudden shocks. Monitoring technology adoption, fiscal policies, and consumer behavior has become increasingly important to ensure that this momentum continues. For now, the U.S. economy's strong performance in 2026 demonstrates that consumer demand, business investment, labor market stability, AI adoption, and cautious monetary policies are collectively creating a resilient and growth-oriented economy. If this trend continues, the U.S. could perform well above expectations by the end of the year, reflecting the direct impact of strategic planning and technology-driven growth. This situation is significant for both investors and everyday citizens. For investors, opportunities are expanding in technology, AI, infrastructure, and services sectors. For consumers, stable employment and controlled inflation mean their purchasing power remains intact, allowing spending patterns to continue. To fully leverage this strong growth, both businesses and policymakers need to continuously monitor economic indicators such as CPI, PMI, employment data, and AI adoption rates to maintain balance in the economy. By doing so, this trend could further strengthen the US's global economic leadership by the end of 2026, although it will depend on careful planning and ongoing monitoring.